Digital euro is too complex and hurts European payments report. CBDC, digital euro, ECB, digital euro design is too complex, offers minimal benefits to consumers and businesses, and could harm existing European payment systems, say researchers. Last updated August 14, 2024 at 5:50 GMT3 by editor Veronika Rinecker. Editor Veronika Rinecker about author Veronika Rinecker is based in Germany, studied international journalism and media management. She specializes in politics and regulation, energy, blockchain, and fintech. Since 2017, she has been author profile share, copied last updated August 14, 2024 at 5:50 GMT3. Why trust Cryptonews? With over a decade of crypto coverage, Cryptonews delivers authoritative insights you can rely on. Our veteran team of journalists and analysts combines in-depth market knowledge with hands-on testing of blockchain technologies. We maintain strict editorial standards, ensuring factual accuracy and impartial reporting on both established cryptocurrencies and emerging projects. Our longstanding presence in the industry and commitment to quality journalism make Cryptonews a trusted source in the dynamic world of digital assets. Read more about Cryptonews. The digital euro proposed by the European Central Bank ECB is too complex, offers limited benefits, and could undermine the competitiveness of European payment systems. These are the key findings of an August 2024 study commissioned by the Association of German Cooperative Banks, BVR, and conducted by payment consultancy Payzys. Researchers from Payzys, including CEO Hugo Gottschalk and professors Malte Kruger and Franz Seitz, conducted a thorough review of all published documents and regulatory proposals from the Eurosystem and the European Commission up until June 2024. Their analysis focused on the consistency and feasibility of the digital euro within the European financial market, particularly from the perspective of retailers and consumers. Digital euro, overly complex and costly. The researchers conclude that the digital euro, as currently proposed, offers little added value for consumers and businesses. The construct is too complex and incomprehensible for users both in front of and behind the cash register. For example, the number of parties involved in a payment transaction would increase from the current 4 payer-payee and their respective payment service providers to up to 8, which would complicate and slow down the settlement process, the 3 experts criticize. This added complexity could lead to slower and more expensive transactions. The low costs targeted by the ECB and EU policy are unrealistic, the report says, and incompatible with increasing Europe's competitiveness. Professor Malte Kruger of the Technical University of Aschaffenburg, one of the study's authors, emphasized that the digital euro, as currently designed, would primarily compete with existing cashless payment methods, rather than serving as an innovative replacement for physical cash. He highlighted numerous unanswered questions and inconsistencies between the ECB's documents and the EU Commission's regulatory proposals. In particular, there are open questions regarding the design of the compensation model, the regulation of liability issues, the design of the offline digital euro, the level of holding limits, and the design of a proposed digital euro card. The strong focus on the smartphone as a payment instrument is also subject to criticism. No full anonymity for the digital euro. The ECB has made it clear that the digital euro will not offer complete anonymity, despite the potential for offline use. All digital euro users will be required to undergo identification during the onboarding process. This decision aligns the digital euro with existing European anti-money laundering, AML, and counter-financing of terrorism CFT regulations that apply to traditional payment accounts. While there might be some flexibility for simplified due diligence under certain low-risk conditions, full anonymity is off the table. The study suggests that focusing on transaction monitoring for offline digital euros rather than mandating user identification could be a more effective way to prevent AML CFT while also preserving user privacy. This approach, according to researchers, would also simplify the overall system and allow for the implementation of inter-PST fees to compensate providers. German banks call for user-centric approach. Tanja Müller-Ziegler, a board member of the BBR, stressed the importance of a digital euro that offers tangible benefits to consumers and businesses. Müller-Ziegler argued the ECB's current approach, which aims to create a parallel state-run system alongside the existing private sector payment infrastructure, is misguided. The focus of all considerations should be on the benefits for users, including anonymity, stability, and data protection. Banking practice must be much more closely involved in the conception of a digital euro. We continue to offer our intensive cooperation. Follow us on Google News.